What's going on, everybody? Good evening. Welcome in, welcome in. Happy to have you all here. Husky, good to see you. Denise, good evening to you as well. Sensei, oh, good night. All right, good night to you too. Che, hello, good to see you. Welcome in, everybody. We're going to get this going in just a few minutes. Just going to give everybody the chance to hop on in before we get going. And we will get right into it. How's everybody doing tonight? I have to say, it's been one of the more interesting 7 days in financial markets in a while. I don't know about you all, but me personally, I'm not super interested in trying to trade through the volatility. As you guys know, I'm a little bit more of a, I don't want to say long term, but medium term to shorter term swing trader. And as a swing trader, it becomes a little bit more difficult when the market gets so volatile, especially when I don't have as much time to trade throughout the day. So, been taking a little bit of a back seat, just kind of letting this unfold, not really getting too excited on anything until we start to see some more constructive setups form, which is fine by me. Gives me a little bit extra time to study, review some trades, prepare for lecture, which I guess is helpful. But yeah, I think that's one kind of important thing to note is that you don't got to be trading every single day, and especially when we're in a market environment like this, it's definitely not the smartest to be holding a bunch of trades overnight. That's for sure. So nothing wrong with letting things stabilize. You don't got to be making money every day. You don't got to be trading every day. That's kind of the beauty of the game. I personally prefer to make money when it's a bit easier. So I have no problems waiting. Yeah, that's the story for me. I'm happy to be patient and wait for the easy money to come. Last night, total rest for you, Helme. Nice. Hope you can trade well today. Yep, I hope the same for you. Hope the same for you. I'm going to send out one more message letting everybody know that we're going to get started here. I'm assuming we're going to have a smaller amount of people. I'm assuming a lot of people are in a mastermind, but that's okay. Still have a nice crowd of our dedicated lecture goers tonight, so that's the most important. All right. Cool. I'll give it just 1 or 2 more minutes and then we'll get going. How's everybody doing though? Any notable things going on in your guys' lives? Me personally, I'm about to start moving, so that's going to be a fun time. Steal the little bit of free time that I had before, but whatever. Yeah, Spike, moving's not the best, but it is what it is. I am moving back to my hometown, back to San Diego. So I don't know how many of you have been in lectures where I've talked a little bit about myself before, kept track, but for the last 2 years, well, I'm from Southern California originally, grew up in San Diego, and then for the last 2 years, I've lived in Orange County, which is just an hour north, so or hour and a half north, and now I'm going back. So yeah, nothing. Yeah, San Diego's pricey for sure. There's no way around it. But how about you? Where are you at, Spike? Oh, you're in Huntington. Oh, nice. I'm right in Newport. I'm on Double Island. Downey. Where the hell is that? That's in like LA, right? Damn. Well, I should have linked up with you guys. All right. Well, I'll still be close by. I'm still gonna be working up here from time to time, so I'm not gone. It's not that far. All right. A couple minutes after the hour. I don't want to keep talking about myself, so let's get right into this. Welcome in everybody. I think a lot of you know me by now, but if you don't, Toasty, yeah, here to give this fifth volume price analysis lecture, giving lectures here and only options for going on probably 4 years in January. So been a little bit, really one of my favorite things to do. It's really one of my passions is giving these lectures. I enjoy it so much. So happy to keep this one going. A couple things to mention before we get started. I've said this in the last 5 classes or in the last 4 classes. I'm going to say it again. Every single one of these lectures typically starts with content that's a bit easier because maybe it's review or it's a little bit simpler in complexity. And as we move throughout the lectures, the complexity builds. So hopefully what you find is that these classes are all structured similar to what you might expect out of like a college course or community college or whatever. That's what I like to try and compare myself to. But as always, if you have any comments, questions, concerns as we go throughout the class, just go ahead and put it in the chat. I guarantee I'm going to miss somebody's question at least once. So if I miss it, I promise I'm not ignoring you. Unless you're Mike, I probably might ignore something that he asks. But outside of that, I'm definitely not ignoring you. So just go ahead, put the question again in the chat, and I will make sure to get to it. Before I continue on, again, fifth time we've given this lecture, so probably sound like a broken record at this point in time. But a lot of the things that we talk about in this lecture series are based on some of the concepts from this book, A Complete Guide to Volume Price Analysis. Definitely can't go through this lecture without giving the author Anna Cooling her flowers. Really good book. I think some typos are a little bit distracting, but great book if you want to get into all this stuff in a bit more detail or present it in a bit of a different manner. We certainly add on to some of the concepts presented here, but yeah, definitely a great baseline and just great information all around. As I mentioned every single time, not sponsored by this author. I'm not sponsored by this book. I get nothing to recommend you this book. That's just the right thing for me to do and give credit where it's due. So go check this book out. If you're interested in what we talk about here, it's like really cheap. It's like 15, 20 bucks. It's really not very expensive. Nice book, like 100 something pages. Yeah. All right. As you guys probably know, we are at class number 5, which is titled Trading Strategy. Those of you who have been here for the last 4 classes know that we started out with the introduction to volume price analysis, moved into some foundational concepts in lecture 2, started talking about some applications in lecture 3, and then moved into a bit more kind of advanced topics last week. And today we really should be putting a lot of the pieces together. So I have a lot planned for a short amount of time. I don't know how it's going to go. We will find out together. One thing to note is that this is the first time I have given every single one of these lectures. So you guys are guinea pigs in that sense, but hopefully still the quality is up to par. So yeah, we'll see how it goes. I think hopefully you guys start feeling good about the last 4 lectures, and I'll make sure to recap everything for those who haven't been there. And then next week, we're going to do a VPA workshop, which I think is going to be in voice chat. And it's really going to be an extension of what we talk about today, I think, because I don't think I'll be able to get to all the trading strategy in the detail that I want to today. So what I want to do is kind of continue our trading strategy discussion next week and have it be a little bit more collaborative. So obviously in voice chat, anybody can unmute their mic and say whatever they want, whenever they want. And hopefully some of you guys are excited and want to participate a little bit and just have some kind of open conversations about this stuff. But we'll see how it goes. I'll try and give a bit more detail and kind of ways to prepare before we get there. That said, there's kind of 2 main goals for this class. Number 1 is to develop successful traders who have a clear understanding of the fundamental principles of volume price analysis. Number 2 is teach attendees how to apply the techniques of VPA to help traders create an excellent trading system. Goal number 1, I think we've definitely done a pretty good job of through the past couple lectures. We've really laid the groundwork for all of the foundations that we need to know. And throughout these next couple lectures, we really should be hammering down on goal number 2 and making the applications more and more clear as we continue throughout the lectures. So without further ado, let's actually start getting into some of the content. So as I mentioned in my announcement about an hour-ish ago, I mentioned that today's recap is going to be a bit more detailed because we're 5 weeks into the course, and I'd like to think in a typical, college course, this is around the time where you'd have like an exam or a midterm or a quiz or something like that. In lieu of that, I'm instead going to not give you a pop quiz because I don't think anybody would really want to do that. Instead of that, we're just going to review kind of the high-level concepts that we covered in each lecture, make sure we're all on the same page. And also for those who haven't been to any of those lectures, hopefully this is a kind of decent crash course. Obviously, you won't get all the detail and all the context. We have 4 hours of it, lectures that we're going to compact into like 20 minutes. So there's going to be things that get left out 100%, but hopefully it helps a little bit. So without further ado, let's keep it going. So if you have no idea what volume price analysis is or what the acronym VPA is, this is a definition that I think I stole from the Google AI, which says VPA, or volume price analysis, is a trading technique that combines the analysis of volume and price movements to understand market trends and predict future price actions. And on top of that, volume price analysis concepts are applicable to every stock on every time frame for every type of trader. which is really the power of volume price analysis, right? It's not like it only works on some stocks. It's not like it only works on some time frames. It's truly applicable to any time frame, any stock, and hopefully after the continued examples that we review today, that becomes even more clear. And really, the idea behind volume price analysis, I didn't recap the history in this portion, but the reason it's so significant is because the techniques of volume price analysis have been established for almost 100 years, and they really started back when markets were non-digitized, non-computerized, and many individual investors and funds were getting their information based on the ticker tape, which was really just a printout saying a stock and a price and a volume, and that's it. And you would get that print of a stock and a price of volume maybe every couple seconds, maybe every couple minutes. So that's really where these concepts started, is monitoring volume and price on a piece of paper that's printing out continuously, all the way to now where we have computerized data with accuracy down to the hundreds of milliseconds. So obviously these concepts have come a long way, but really the idea behind volume price analysis is using a combined technique of paying attention to patterns in volume and how it corresponds to movements in price in order to determine what institutions are doing with their money in a given equity. So for example, using these concepts of volume price analysis helps us understand if institutions are buying or selling a stock, if a trend is strong or weak, if a breakout is strong or weak, etc., strictly based on volume and price. So as you probably heard me say before, volume and price truly are the most important indicators in the entire market. Some people might tell you otherwise. I personally would never agree with that opinion. Volume and price are the two indicators that are real time, right? They have absolutely no lag. It is exactly what is going on in a given stock. And as a result, they're very important. Obviously, in my opinion, a lot of people share that opinion, but some people don't. You'll find that here and there. So just a quick introduction. I know I talked about a lot there, but just want to start from the basics again. I know people like Husky probably aren't too excited to hear this, so sorry, Husky. But just as a note, going back to basics here, volume represents the amount of shares traded in a given time frame. So this is a pretty simple candle chart here. At the bottom of the chart, you can see we have a bunch of volume bars, and each one of these volume bars represents the amount of shares traded in this given time frame. And the time frame that we're looking at is the weekly time frame. So each one of these candles up in the top half of the chart represent 1 week of price action, which actually ends up being 5 days because Monday to Friday. So each one of these candles represents 1 week of price action. And at the bottom, the volume bars represent 1 week or 5 days of trading activity. So it's the amount of shares exchanged within that time frame. And the reason that's important is because this allows us to understand where more people are buying, where more people are selling, and where people aren't as interested, or when people aren't as interested, I should say. Another thing that we talked about is the laws of volume price analysis. So there's kind of three main laws. I'm just going to cover them at a high level really quickly. The first one is supply and demand. This is one that's really not specific to volume price analysis. It's something that you could pretty much very commonly hear in most trading strategies in some synonym or the same phrasing. Supply and demand really, very simply put, just states that the market is driven by supply, meaning people willing to sell a given asset or equity, and demand, or people willing to purchase a given asset or equity. And the imbalance between those two factors is what causes movements in price. So this is also kind of like economics 101 as well. Like when supply decreases and demand stays constant, the price goes up, right? And the example that I like to give, which I don't even know resonates with people at this point, is like PS5s, right? Some of you may play PlayStation. I personally don't, but I know when PlayStations were first released, they were super popular. Everybody wanted them. So there's a fixed amount of supply, right? They can only make so much PlayStations per day, especially when they're first getting started, and a bunch of demand, right? So many people want the PS5s. So as a result, they're being resold on secondary markets at a way high above price. I don't know what the MSRP was, probably $500. They're being sold for up to double that price just for people to get them. And obviously, as time goes on and on and on, that demand wanes, right? So people are less excited to buy the PS5 now that it's been out for, I don't know, 3, 4, 5, 6 years. And as a result, the price stabilizes and comes back to that normal MSRP, which is probably $500, and maybe has even dropped from there. I really don't know. But that's the kind of first law of volume price analysis, which is supply and demand, also pretty basic economics too. The next two are a little bit more specific to VPA, but also have some analogs in other worlds. The second one is cause and effect. And very simply put, volume is the cause, price is the effect. So when you see that volume tick up, very commonly, you should expect to see a larger magnitude move in price. And if you don't, that's called a volume price anomaly, which we'll get into in a little bit. The final law is effort versus result, which kind of talks about what I just mentioned, kind of the caveat to the second rule there, which is every action must have an equal and opposite reaction. And that's, I think, a basic law of physics. I believe Isaac Newton is the one that coined that phrase. Maybe not. Maybe it was Einstein. I don't know. Some smart physicist coined that phrase. And in the market, that also is true. So, for example, the way this applies is if you see a large amount of volume in a given stock, you should also see a large corresponding move in price, which, for example, on the S&P, right, you could see we had pretty historic volume, right, about 150 million volume, which is the highest, at least in this last year period. And during that time frame, we had gapped down upwards of 4-ish%, and ended up gapping down about 3% in the day, which I would assume that's about the largest move lower in this time frame. I can't tell for sure, but I think 3% is the biggest drop within that time frame. And as a result, it corresponds to the highest amount of volume as well. So it makes sense. Yeah, that's the big idea there. Everybody following with me so far? I know I'm flying through this, but I'm trying to find the balance between getting everybody up to speed and also making sure we get to our examples later in the class. Everybody feeling okay so far? I don't see any questions yet, and nobody's told me to shut up or slow down. I know some people are probably thinking that. If you have any questions, let me know. Also, we've covered all these concepts in a little bit more detail and a little bit slower in prior lectures. So obviously, those are always available to you. Okay, good. Glad you guys are feeling okay. And yeah, sorry if it feels like I'm rushing a little bit. It's kind of because I am. All right, let's keep it going. So zooming in a little bit on the concept of effort versus result. Typically speaking, if this law of VPA was kind of in line, you should expect if you see below average volume, you should have a small spread. And what that term spread means is essentially the distance between the open and close of a candlestick. So for example, this, and I'll just zoom in on an area so it's a bit more clear. Remove the moving average here. So this distance right here, zoom in even a little bit more. This distance right here is the spread of this candlestick from the open to the close. This is the spread of the candlestick here, from the close up to the open. This is the spread from the close to the open. Oops. This is the spread from the open to the close, right? So you kind of see, hopefully, what I'm talking about there. The spread is really effectively the size of the candlestick without the wicks. So I can even show you in a different way. Maybe this will help really hammer this concept home just because I kind of feel like doing this. Let's go. Yeah. So here you can see very clearly, these are the spreads of all these candlesticks, right? There's no wicks. So essentially every candle that we see here is just the spread. And I got to make sure I get rid of that because that's going to drive me crazy. All right. So generally speaking, if we see below average volume, we should see a smaller candle spread. Average volume should correspond to an average size spread. And above average volume should correspond to an above average size spread. And from this specific example alone, you can kind of see how that lines up. So you have to take my word for it, but this volume on the left corresponds to this price action on the right. I believe this is actually Dell. And you can see here, this big red bar here corresponds to this large spread candle here. And you'll notice this is the largest volume in that period, and this is the largest candle spread in that period. So the effort is matching the result. And same thing here with these high volume days, right? Generally speaking, it's lining up well with our large bars. And then towards the right side of the chart, you can see these really low volume days, right? Which just kind of, if you squint, you can kind of tell that they're below the average. We have very tiny candle spreads, what some may call a doji candle. So anyway, that's really when you see kind of that effort matching the result. And the reason this is important is because we want to know when we have a volume price anomaly, which essentially looks something like this, where we have, say, below average volume and an average size spread, or below average volume and an above average spread. Really what that is a volume price anomaly. So yeah, essentially we'll get into what that means in a little bit, but that's kind of the big idea of kind of starting to spot reversals. Generally speaking, when looking for a reversal, it's pretty common to see a volume price anomaly. It's what's called stopping volume as a concept. So anyway, let's keep it going. So I wanted to mention this concept of testing the market. This is really the first step in starting to put the concepts of volume price analysis to something more real. This specific example represents a test of resistance, right? So if you've ever traded a breakout before, or if you're familiar with the idea of trading breakouts, you'll know that when trading a breakout, and I could even pull up an example. Let's see, let's probably SPXS is probably a great example right now. Not quite. How about NVDS? Probably a good example. Okay. So this is inverse NVIDIA. So it should be a decent example in the short term. When trading a breakout, typically you want to be paying attention to some specific level that has acted as resistance in the past. In this case, probably right around here, this 43 area, right? You can see a little bit of resistance there, a little bit of resistance there as well, starting to make it above that level, a little bit of a fake out below. This is kind of a messy chart, but this hopefully gets the idea across, right? So typically speaking, when you're trading some kind of breakout, this is the type of price action that you're kind of looking for, where you have this nice basing action under a given level. Generally speaking, you're taking in a stock that's trending in the direction of your breakout, not something like this, which I guess you could consider more of a reversal. Anyway, not going to get too far into the technicalities of it, but essentially this is kind of the core of a breakout trade, right? Horizontal level that you're tracking, base forming under it. And generally speaking, right, when you come up to test that horizontal level, you don't want to see something like this specific example, where let's say this area right here that we're coming up to test at the high of this chart is some arbitrary level of resistance. What you don't want to see when you come into that level of resistance is a large amount of sellers stepping into the marketplace. What that means is essentially sellers are still in control of the price action, right? One thing that we mentioned in the very first lecture is that the market essentially is a constant tug of war between buyers and sellers, fighting at all times. And each one of them is always fighting for control. And at this point, it's very clear to see that while buyers move this trend up in a nice way, sellers are very clearly still present in the marketplace, especially when you see this high volume, right, which is the highest volume bar in this period, appearing at resistance with a large spread, right? So this is an example of sellers still being present in the market in a test that's likely to resolve with price action trending lower. Whereas this specific example, compared to the other one, is the exact same trend higher into that same level of resistance. However, we have incredibly low volume with a reasonably, I'll say, not bearish candlestick. Some might call this, what is this, a hanging man, I think. I don't trade those, but some people do. Anyway, this would be a much different story, right? So we have the same trend higher in both examples. However, in the second example on the right here, we have much lower selling volume, which is something that we want to see before a larger breakout takes place, right? What this tells us is that sellers are essentially no longer really present at this level in the marketplace. And one example that really puts these two concepts together is the example in this slide here. So this was an example I pulled from the Dell 30-minute time frame, and it should represent kind of what we talked about and kind of combining it all together. On the first test of this $150 level, you'll notice we have really elevated selling volume with a massive spread candlestick to the downside, right? So this is going to be a really difficult bar to expect a breakout soon after, right? This shows us that there are very clearly still a large amount of sellers present in the market. Again, we test that same $150 level and we have that elevated selling volume in the market. Again, we test that 150 level and have even more selling volume in the market, which is another indication telling us, hey, at this point, sellers are still present at this $150 level. Now, we start to test it again 2 more times, and you'll notice the volume of sellers begins to drop off significantly. So we have these 3 bars of above average selling volume. Then the next 2 tests of this 150, we have pretty much no sellers, right? You could see how all of a sudden those sellers vanished compared to those prior bars, which is a very fascinating thing to be paying attention to, right? This is really putting that concept in the previous slide together, where previously you saw all those sellers present in the marketplace and all of a sudden they vanished, right? Which essentially should mean that they don't have any more shares to sell at this level. Either they've unloaded their whole position or they've sold everything they wanted to at 150 and they're done for now. One thing to be mindful of as we continue throughout this class is that institutions have a lot of money. Case in point, right? And they can't simply unload a $300 million position in a minute, right? It's just not going to work out well for them because the problem is they want to fill their shares at a specific price, right? They want to know how much money they're going to make. And if you sell a $300 million position, and that's an arbitrary number, right? Let's just say a big position on the market, the price is going to drop very quickly in order to meet that large amount of supply, right? Because that's a massive order. So there's a couple things that they can do to mitigate that, right? They can spread that order out into smaller chunks over time, right? Which is what we see here likely. Or they could use different trading facilities to potentially deal with that massive amount of shares that they need to unload. So anyway, a little bit of kind of background there, but the big idea here is that it's very important to notice and be paying attention to the amount of buyers and sellers showing up in the marketplace at these key levels. And lo and behold, once we did, and yeah, again, this is a good sign, right? Seeing that low amount of selling volume as price continues to test that 150 is a positive indication. And the most interesting piece of this chart is once we finally broke above this 150 level, you'll notice we come back down, retest with, again, really nice kind of bottom forming here, right? We're starting to get these long downside tails. And that first green bar off of that 150 level gives a massive amount, well, not massive, but a significantly increased amount of buying volume as price moves higher. So ultimately, really nice retest here as well. One point that I brought up when we first showed this example is I would hope that if you are trying to trade this breakout, you wouldn't be the person buying the probably 4 or 5% gap above this level, because that's not really a great idea. But anyway, even if you did, it still kind of would have worked out for you. But as a breakout trader, that's going to be a bit irresponsible. So just kind of something that I had to know before I continue throughout this class. But anyway, all the kind of volume price analysis is really perfectly in line here, right? Thinking about this chart again, as we continue to test this 150 level, the amount of sellers in the marketplace decrease, which indicates to us a positive sign, right? That's going to be much more bullish than bearish, right? And again, if you aren't familiar with those terms, when you say you're bullish, you're thinking a stock or equity or asset is going to move higher. If you say you're bearish, you think a stock or asset or equity is going to move lower. So as we continue to see the amount of sellers in the marketplace at this 150 level decrease, that becomes a more and more bullish indication. And ultimately, we gap above that 150 level. We had known previously that the amount of sellers had decreased significantly. So once we get that retest of 150, it should be a reasonably easy buy. Even if you don't buy right at 150, once you see this bottom forming, right, that's a positive sign. And even if you don't want to buy off of this candle, once you see this nice green bar pushing off of this 150 level on rising buy volume, that's about as good of a signal that you could possibly get to say, we've gotten a breakout, we've got a confirmed retest, buyers are very clearly stepping in here. This is exactly what you'd want to see. So anyway, nice example for Dell on the 30-minute. And again, as we talked about, nice volume validating price here. You can kind of see it's cropped a bit, but as the spreads of those bars increase, we see that volume rise as well, which just continues to validate our position. Okay, guys, we covered a lot. All right, the last couple things that we covered in last week's lecture is one of the kind of more advanced concepts that we talked about is the volume profile. So everything we've talked about for the first 25 minutes of this class have corresponded to volume by time, which is shown at the bottom. So as you can see, all these volume bars are plotted by time. You can see in this daily chart, it shows dates, whereas the volume profile plots volume by price. So you could see the amount of shares traded at specific prices, which really truly is an excellent way to visualize zones of supply and demand. And you can see it pretty clearly here. I didn't add the slide in, but there's kind of two main terms to be mindful of, which are volume gaps and volume shelves. The shelves are very commonly areas of support. The gaps are very commonly areas where price can move through very quickly. The gaps indicate a lack of liquidity, meaning that buyers and sellers aren't very interested in trading at those prices, which that could be for a number of reasons. All we know is that there's not much interest or support in that area. So if price does come into these prices, there's not really much of a reason for price to hold up, which I would believe this is really cleanly reflected on the SPY now. We just take a quick look. You can see how quickly price fell through this most recent gap, right? Here you can see a massive volume gap. It took us 1 day to cut through it. Nobody should be surprised about that, right? Once price moves into that gap, there's pretty much not much holding it up anymore. Although a lot of this move happened overnight, I think the principle still definitely applies. You take a look at the shelf on ES, and it's going to show you the exact same thing, right? If you're trading this overnight, massive gap here, which really truly indicates a lack of support, especially when the trend is down, right? There is just nobody interested in buying at these levels until we come down to some of these prices around here, right? That's where we get the first kind of sign of potential buyers, which didn't hold up. Here, another reasonable shelf, which is another place that buyers could step in. And here as well, which you notice the area that we bounced on ES pretty closely corresponds to a nice large volume shelf on the futures as well. So again, case in point is really that the volume profile is a very, very useful tool in determining high quality areas of support and resistance. And hopefully we'll have a little bit of time to kind of walk through some examples with that. So I think, yes, the volume shelf is the gray line. Sorry if I didn't make that clear, but yes, it is the gray and pink line in this chart. All right, I got to take a breath. So that was the extended Class 5 recap. With that said, I have 3 real-world examples that I want to cover. The one kind of unfortunate piece about where the market is currently trading is that there aren't any setups, at least that there aren't any trades that I would really like to take on the higher time frames. And I'm trying to focus on the higher time frames for now, just because that aligns a little bit more with my strategy. And yeah, right now there's not really any trades that I would take based on volume price analysis really significantly. I think the short trade is still pretty reasonable, but kind of chasing at this point. But regardless, we're going to recap still a couple of recent examples, talk through kind of how to develop a trade plan, how to identify what the direction you should be trading that given asset is. So I have 3 names that I have prepared: Tesla, MU, and SPY. Depending on how quickly we get through those, if you guys have anything else you want to look at, anything else that we can learn from, happy to cover it. I know I see Triple H put DIS in there. Yeah, as I mentioned at the beginning of this class, obviously the market's in a pretty interesting spot. What I said is that essentially it's a great time to take a step back, to study, to learn. Me personally, I prefer for setups to be a lot easier. I prefer to the market to effectively be in easy mode because, I mean, why would you not, right? I'm not here to fight for the difficult pennies. I'm here to take the easy dollars. So as a result, I'm generally sitting on the sidelines, which I have absolutely no problems with. Definitely being able to sit on your hands is a skill that I think a lot of people could work on developing. So that said, let's get into some real world examples. All right. So as I mentioned, the first one that I wanted to cover is Tesla. And let's clean this all up here. And it looks like we have exactly what we need. So we also talked about a couple of other concepts that I didn't recap in this lecture, but we talked about kind of the use of the market cycle philosophy, which really heavily involves the use of the 10 and 20 moving averages. So with Tesla, I want to start on the weekly time frame. So Tesla, obviously, I mean, even if we zoom out, has been doing effectively nothing since the beginning of 2024. You can see we opened the year right around here and pretty much has gone nowhere at this point. It's obviously down a little bit, but effectively hasn't done much. So I want to start out with this specific name. So Tesla, obviously, sentiment has been effectively at all-time lows, at least throughout the February to March to April period. And what I found interesting is this kind of compressive action right at the moving averages as we got into May, June, and early-ish July. And what's interesting to note here is that we have a lot of kind of clear downtrend type of action. But finally, we started to really start to firm up around the moving averages, where you start to see these levels actually acting as some support, where we have that 10 moving average starting to act as support, and also that 20 still acting as resistance, but eventually price did make it over those levels. And taking a look at the volume profile as well, might not be as clear that zoomed out, but you'll notice this also corresponds. Let me make this a bit easier to see here. One thing with the volume profile is it can be difficult to see the way I have it set up. So just give me a quick moment to make it a bit more obvious. There we go. So kind of an interesting thing about Tesla here is it actually started to use this massive volume shelf here as an area of support. And one thing that I didn't mention in the recap is this pink line here is what's called the volume point of control, which represents effectively the strongest support on a given time frame. This is where the highest number of shares have been traded on Tesla. So let's take a quick look a little bit more closely at the daily. And what you'll notice here is a very interesting picture that I want to talk about a bit more. So moving on to just this specific area in the chart, the one thing that I really want to highlight is these two bars, this bar and this one. I'm going to ask the question of the class, but what is notable about these two volume bars? And I'm just going to remove the yellow indicator so you can see more clearly what's going on. But based on what you know, as of the 5th week of this class, what's significant about these two volume bars here? And also the corresponding candles here and here. Mike Brotherson says gaps. Yeah, I agree. Aaron says setting up a reversal. Yep. Sensei Black says buyers. Yeah. Really simply put, it's the first sign of real buyers in this name, right? Real above average amounts of buyers. You look at this name throughout the past year, right? And again, I'm eyeballing it, but this is probably the average volume, maybe a little bit lower, right around there. This is the average volume. And for the most part, and again, it's just mostly a guess. For the most part, we really didn't get a single day besides this one here, of a large amount of buyers stepping in this name. And a name that's in a downtrend needs a large amount of buyers to begin reversing, right? That's it, right? A name won't move higher if buyers don't begin stepping in. That's it, right? Nothing will happen. It's cause versus effect. Again, if there is no cause, meaning no buyers, there's not going to be any effect. So those that were looking for months and months and months and months for a longer term reversal in Tesla likely never got it because there were never any significant amounts of buyers, right? Above average or unique amounts of buyers, right? There's your average amount of buyers here and there, your average amount of sellers, but never any above average buyers and sellers. Here, though, we got a massive change in character in a couple things, right? Number one, we left two big gaps in price, which you look at the last year in Tesla, something like that has never happened. You look at this move from low to high, it is a 42% increase in price in 6 trading days. This is Tesla, but that is not normal. Not normal at all. So seeing a move like this should make you think something is going on here. People are buying this name hand over fist throughout this period. And remember, as we talked about, I think in lecture 2, institutions and smart money will always, and I'll say the best institutional traders, will always buy the bottom and always sell the top because either they have the best analysis, they have the best traders, they have the best information, whatever it might be. They always buy exactly where they need to. And their buys influence markets, right? A 40% move doesn't happen just because you or I bought 3 or 4 shares. This isn't retail buying shares because they think the earnings report is good, right? That's not what happened here, right? This is institutions buying Tesla because something fundamentally changed as a result of either news or earnings. In this case, it was both. This specific gap, I believe, was due to them licensing full self-driving to a Chinese company, maybe. I don't remember. And this was due to a more upbeat than expected earnings, right? So 2 reasons. We don't even need to know the reasons, right? That's not important. I just mentioned it because I think I know them, just to give you the context. But that's not important. What is important is identifying this sort of anomaly, right? This is not normal for Tesla. And the key of volume price analysis is recognizing this sort of move. It doesn't mean that on this earnings gap up, you get long right here. That is not what we need to do for volume price analysis, right? That is not how we need to trade. We don't need to be the first ones in. We don't need to be in at the same time that the institutions get in. It's not possible, right? What we do need to be able to understand is look back at a chart like this, understand where they entered, and start figuring out how to set up a trade off of that, right? How to develop a trade idea based on that. So let's think about it, right? Obviously, a very important level is going to be this one, 199.07, the high of day off of this 42% move, right? Absolutely, absolutely going to be an important level. Next, you can see we spent pretty much almost a month and a half to 2 months doing absolutely nothing, which is exactly what people love to do, right? That's what institutional investors love to do, right? They need time to accumulate their positions, right? They're not just going to keep this thing going 100, 200% higher. This first big move happens, and then they need to spend time actually buying their positions. So what happens here is likely some accumulation from institutions, nothing major, right? We don't get any super above average volume. We have, if we consider the average for this period right around this level, we have a couple above average days here, here, and here, but nothing that really stands out in the grand scheme of things. So a little bit more of a different one there. But what we need to be able to do is actually structure a trade idea off of this. When price is in range, we can't be very aggressive, right? When price has recently ran 42%, it's not a very good idea for us to be incredibly aggressive, right? It's just not. So price is in a very clear range throughout this area, right? We set this first swing high right around here, and we remained in range ever since then. So to me, I see a couple reasonable places to be getting interested in this name. And I want to note before I get into too much detail, obviously, we are looking at this name with the benefit of hindsight. We know what happened. Everybody knows what happened. So anybody can look at this chart and tell you, this is the two perfect places to buy. Obviously, we don't get to do that on every trade. The purpose of us reviewing examples like this is for us to have a framework, us to have reasonable criteria to be looking for in future trades. Because whether you like it or not, the market doesn't do anything new, ever. Nothing is ever new. Sometimes global events are new, but the way the market moves, the way the market reacts is never new. So that's why we want to study from the past. Yeah, we're watching the film, Aaron. Exactly. That's a great way to put it. So a couple breakout levels I think that you could pretty quickly identify here. You have a clearly obvious pivot here and a clearly obvious pivot here. Right? Clearly we put in a significant low here. We tested that low here. Interesting thing to note is that we wicked right under that low. So buyers that had stop losses, buyers who bought in this range who had a stop loss right here got washed out on this day, which typically is a good sign. Here is when things start to actually change a bit. In this specific area, we don't have much going on, right? The moving averages are effectively flat, prices in a range. Here, we start to get some real activity. And actually, I'm just going to do it. If we zoom in on the 4 hour, it's going to be a little bit more obvious what's going on here. Now, something interesting is we're starting to see a setup on the lower time frame, right? If you look on the lower time frame through this period, there's pretty much nothing exciting going on, in my opinion. Like really nothing. It's just a range. Here, though, we start to see something a little bit interesting, right? Something that starts to look like maybe some kind of flag, maybe some kind of consolidation. And the interesting piece is this corresponds to the exact time the moving averages began sloping upwards, and we started to get some distance between the two, which this to me is when this setup really started to get into a more active phase. So a couple ways we could have potentially traded this, right? We could have followed this trade higher after identifying key buyers present in this name, a nice range here. We just take the break of that range right around here. Once we break out of these previous highs, you can get long. In a trend, the swing highs and swing lows are the most important. That's all you really need to care about. Those are the most important and easiest breakout levels to monitor. So let's say, for example, again, you identify clearly high volume in this name, which really starts to look like a significant reversal. You identify this more active sequence here, where we start to consolidate above the moving averages. We're actually holding above the moving averages now. Like you look at these two different times of the chart, they don't look the same at all, right? Here you have a bunch of kind of mixed action above and below, kind of hip hopping. Well, I don't think that's what I meant to say, but hopping back above and below the moving averages. Where here, they actually start acting as support. So what you could do is monitor this specific pivot, 191.33. And let me go back to what this looks like on the 5 minute when we broke this level. It's going to be a while ago, so give me a second to get here. I don't know what day we first broke it. Okay, this is it. So now we're using our volume price analysis on the lower time frames. What do you notice on this day? And I'm going to zoom out here. What do you notice on this day? This day right here. What's different about the volume here versus here? I mean, even here has that same pattern. Here. Yep, I agree, Triple H. One thing that's even more important, though, absolutely great volume on the breakout. The most interesting part about it, though, oops, I reset the chart. The most interesting piece about it is that volume actually increased after the open. You'll notice we're looking at, I don't know, a period of 10 days right now. Every day after the open, volume drops off. As we talked about in the first lecture, volume follows patterns, right? Every single day, this is what happens. You have the highest volume of the day at the open, volume drops after that, you have high volume or higher volume at the close. Here, that didn't happen. Here and here, that didn't happen. Not only do we get nice high volume, but also when we broke this 191.33 level, we got higher volume than we did at the open, which this is another type of anomaly, right? As we know, volume follows those patterns. Volume in the morning is high, volume in the afternoon is high. Throughout the day, it tapers off, very generally. That is not what happened here. And something very interesting to note. So we've identified this key pivot here on the daily, right? Again, when trading with volume price analysis, in my opinion, the best way to structure your trades is based on swing highs and swing lows. I don't think it's reasonable to say you could have gotten long here, personally. Obviously, you could have. I think it's a lot harder to find. Here is when it starts to really become easier, though. Again, clearly active sequence, well-defined pivot on the daily, right? Very clean target above as well, right? I mean, there's really one place you need to be paying attention to. 199, also up to 200, because obviously that's a key round number, easy one. But very clear what's going on here, right? Again, back to the 5 minute. I just want to highlight this one more time. This is exactly what you'd want to see, right? So this is really the time frames coming together where you've identified the setup on the higher time frame, right? Clearly buyers present in the name. You come down to the lower time frames. You identify this anomaly off the open on the 5 minute, right? Volume increasing after the open. That doesn't happen very often. Go look through 50 charts from today. You probably won't find a single name that did this. And I'll look through after this just to prove it to you. It's very uncommon. And lo and behold, that inrush of volume came right when we broke that key pivot. Then we effectively just consolidated above that level. No large amounts of sellers, right? This reasonably on par with the average of the morning. As we continue throughout the day, there's not a single significantly above average sell bar, right? We have another decently above average buying volume. And then here, as we break this range, again, buying volume starts to pick up. So we break out of this new swing higher range that we created, and more buyers begin to step in and continue trending higher throughout the rest of the day, which ultimately led to a much larger breakout in the coming days and weeks. So very interesting example. And this, I think, illustrates incredibly well the best way to really be trading based off volume price analysis, right? At the end of the day, all you need to do is react to seeing these patterns. That's it. There's no need for predicting what's going to happen. All you need to do is identify what's going on, which is pretty simple, right? At the end of the day, with a lot of practice, it becomes second nature, and react to it. Our Brooks, great question. Let's cover that again. So our Brooks asked, can we recap really quick how I spotted the buyers in a bigger time frame? So Tesla's a really aggressive example, which is why I wanted to stick with it. Buyers are very evident on the larger time frames on this name, right? There's two very significant, and I just want to zoom out really quick. Let's even zoom out a bit more. Past 3 years. The last time we got volume this high, this was April 2024, was in January 2023, at the beginning of another massive rally. Middle, I guess. So this type of volume doesn't come around that much, right? This was actually the second highest volume in 3 years, in a 3-year period right here. So clearly it matters, right? Clearly it's important. And zooming in, and hopefully that starts to answer your question, Brooks. When you see something like that, where you're putting in an amount of volume that has only happened either once or twice in the time frame, it's important, right? This is the second highest volume in 3 years. We could zoom out even more to maybe 5. Okay, so zooming out to 5, it actually doesn't really compare anymore. So the last 3 years, though, definitely very important. And 3 years is a very large time of reference. So zooming back into 1 year, very evidently, there are 2 above average buying days here. Then price sits in a range. No significant selling takes place in this time frame. Maybe this 1 day right here, but this was also a gap up. So it wasn't really just a selling day. It can be deceiving a little bit when you see the volume bars colored red, but actually this was a move higher in price, about 3%. So really no significant selling taking place as price consolidated. Then the moving averages begin to move higher, curl to the upside. We get a little bit more of an active sequence, can start to identify maybe a bit of a trend line to monitor. And then into Gail's question, which is about explaining swing highs and swing lows. I didn't really cover it in too much detail. Talked about it a lot in previous classes, but it's pretty simple. So hopefully you'll be able to catch on quick. Essentially, identifying swing lows and swing highs is really simple. As you know, well, maybe know, a trend is really simple, right? That's all it's made up of. And if we just simplify this trend out just to lines like this, all this is an initial high here, an initial low here. Then here we have a lower high. Okay. And a lower low. And duplicating that on over here. And every single one of these labeled points are key pivots in a trend, which you'll also hear me refer to as a swing high and a swing high or swing low. So every single one of these are automatically always going to be levels to be paying attention to. And lo and behold, as I'm saying that, you get the perfect reason why to care. I mean, look at that. It's like that didn't happen by accident, right? So these levels in the trend are very important to be paying attention to. And obviously this is kind of blowing this concept into a really large time frame trend. But we could do the same thing zooming in a little bit, right? If we zoom into just this area here, we have the same idea. If we simplify the trend where it looks something like this, then like this, and again, I'm just simplifying with lines, so it doesn't really mean much. This, then something like that, right? In the same fashion, we can identify swing highs and swing lows. Here, here, here. It's the same idea. So really, the short answer is swing highs and swing lows are essentially where price has pivoted in the past, where price has changed direction. That's really all it is. It's key points in a trend. And the reason that matters is because the structure of a trend, well, I would say the definition of a trend depends on its structure. So for example, if you're setting lower highs and lower lows like you are here, well, the trend is down, right? And as I've hopefully established in the last couple of lectures, your probability of being right heavily depends on the direction of the trend. So if you're looking to get long in a downtrend, the market's automatically going to be working against you. If you get long in an uptrend, you have that kind of wind at your back. Cool, glad you got it. So that's a big idea on Tesla, right? And I think this really nicely illustrates the volume price analysis concept on multiple time frames. And I just want to show that one more time on the 5 minute because I think it's so cool how well this works out. So again, right, just to recap, I didn't expect to spend the whole time on this example, but we'll have to get to the other examples next time so we can spend an equivalent amount of detail. Here, clearly can identify above average volume on the daily, right? And this is why it's important to zoom out, right? At first glance, you might look at this and say, okay, not that high. You zoom out to something like the last 3 years, and all of a sudden, you're crazy if you don't think this is above average volume, right? Crazy. Clearly, buyers present in the name, right? There's no denying that. Also, just based on price action alone, leaving behind 2 bull gaps of this size is not bearish at all. Again, price then sits in a range for multiple months, right? About a month and a half, it looks like, just off a quick glance. Yeah, from mid-April all the way to mid-June. So actually 2 months. Long time doing nothing, right? Which is fine, right? Doesn't affect us at all. So we can be patient. The sequence becomes more active here, right? Again, moving average start curling higher. We start to actually use these levels as support where previously a lot of action below the moving averages, indicating that there's not really much going on to be excited about. Here's when things actually start to become a little bit more interesting, right? We start to get a bit more of a clean trend. And finally, we've seen it on the 5 minute already, so I'm not going to pull it up again because it takes some time. But this 191 level, key swing high in this area, right? This is the most recent swing high to be paying attention to. We break this level on the 5 minute with rising volume, which breaks our typical volume patterns off the open. A pretty no-brainer buy. Colin wants the volume profile on the chart. Let's take a look at it. Very nice. Reflects exactly what we would expect it to, right? Notice how quickly price can move once it starts to get into these volume gaps. Here. The crazy part is that price actually gapped over the shelf overnight, which that's pretty crazy. But you'll notice, right, these volume gaps are here for a reason, right? There's no resistance in these areas. And that's really the ideal trade for me, is when you can take a trade into an area with a decreasing sized shelf, which is exactly what you see here, which really just means a lack of resistance above, right? You have all the support below, all the buyers present. Notice how price just sat on this shelf for 2 months, did nothing, starts to move above this shelf here. And really, I mean, if we're just looking at the volume profile alone, about here is a level to be monitoring, right? Right where the shelf tapers off, which pretty closely corresponds to our breakout level, right? So anyway, and I mean, if you even wanted to be more patient, you could just monitor this gap level right here, get long above that. So there's so many ways to trade it with your target here on the other side of the gap. So many ways to trade this, right? There's really not one correct way. But I think this example really nicely illustrates all the concepts coming together. Obviously, I didn't expect this to go this long, so I think we'll have to go in detail, in the same amount of detail, and a couple more names to really make sure everything starts to click. But how did that feel? I mean, does this make sense? Does it make sense how all the concepts can come together like this? Yes, Marina. Me personally, I prefer using volume price analysis on swing trading, but like I mentioned, applicable to all time frames, right? We went down to the 5 minute and it works amazing, right? It aids you in your swing trading, right? But Marina, me personally, yeah, this is typically what I use to find high quality swing trades. But again, right, very applicable to day trades, right? You didn't even need to care about the higher time frames to take that shorter term trade, right? The higher time frames obviously give you needed context and it gives you that pivot to watch out for. But this could have not happened at all, right? This move right here could have not happened. And seeing that move on the 5 minute is still a pretty valid reason to get long. And just because I wanted to show you that example, right? We noticed that volume increased off the open. I know it might be difficult to see, but last 6 days in Tesla, that didn't happen a single time. The open volume was the highest until the close. Here. It doesn't happen, right? You look at SPY. Same thing, even with all the news we've been experiencing, right? Same exact thing. The open volume is higher than anything else except the close. Amazon, same thing, right? Open volume is higher than anything else except the close. Apple, Open volume is higher than anything except the close. And there's been a lot of crazy stuff going on in the market. So that doesn't really help this look that clean, but it's the same exact thing, right? Everywhere. The open volume is higher, volume tapers off throughout the day. You look at any name in any sector. Oh, reality. Oh, here you go. Here's an interesting one. Finally, something different. So this would be an anomaly, right? These last 2 days. This is interesting, right? Yeah, we'll look at AVGO as an example. Here we go. AVGO. Here you can see, again, same idea, where the volume at the open is the highest of the day until the close. So what I'm trying to prove here is that what we saw on Tesla there is not normal. I mean, we found one example with it, which was this name, which had earnings. So there's going to be a little bit more funky stuff. This, same thing. It's going to be the same. Oh, look at this. It's not the same. So look at that. Very interesting. Into earnings too. Very interesting here as well. So a couple names. Very interesting, right? You'll notice we get this high volume here. Check this out. I haven't updated this in a while. This is very interesting though. So check this out. This high volume. Oh, wow. This is really interesting. Very high volume midday with a tiny spread bar, right? So very good example of an anomaly there. And then once we actually start to break down even higher volume, and then we start to continue lower the next day, which obviously could be fueled by everything else going on in the market. So I can't give it too much weight on its own, but that's very interesting as well. Very interesting. This would be a really good example, zooming in here, of a test of the market failing, right? You have this kind of minor level of resistance here that's formed intraday. We come up to that level, a massive amount of sellers step in with a tiny spread. That's very suspicious, right? Very suspicious. Not what you want to see if you're looking for a breakout. We'll look at the daily. Yeah, so Disney, from a volume price analysis perspective, looks pretty awful. I mean, realistically, it looks like it's ready to come back down to this 84 area, right? We have a massive amount of sellers coming in as we break this low right here. This is not something that you could reliably get long on. Obviously, it can work. I mean, with everything going on in the market, it could very easily bounce tomorrow, right? I wouldn't be surprised. However, from a volume price analysis perspective, it doesn't look great. It doesn't look great, right? Seeing that massive amount of selling volume step in as we break the lows, that's not what you want to see if you're long. HWM? What is this? This is really interesting. I don't even know what this is, honestly. I mean, it seems like it's doing what you would expect, I guess, but yeah, kind of. This one's a bit more interesting. Government stock. Okay, the defense contractor. I mean, generally it makes sense, except for this. This would be an anomaly, right? Really high sell volume, no follow through. Interesting. Yeah, I don't have much to say on this one, honestly. This is an interesting one. Okay, that's really the big idea for today. Obviously, I have at least 2 more examples to cover next time. So I think what we'll do is we'll start next class with me reviewing the examples. We'll do it in the voice chat so we can all have kind of a more open discussion. And then hopefully you guys could bring maybe an example or two. I'll give a little bit more of a preface maybe next Monday to prep you guys for it. And we'll just have a conversation. You can ask questions, talk about stuff, whatever. Yeah, that was the end of it. Thanks so much for being here. I hope you guys enjoyed the detailed deep dive into that one example. I was expecting to get to more, so I apologize for our folks like Husky. And I know Gail's been doing a lot of these classes, so I apologize that we spent a lot of time recapping stuff you've already seen. But just know, hopefully it helped you too in some way. So anyway, that's the end of it. Thank you guys so much for being here. Hope you guys have a great rest of your week. Again, as I mentioned, I'm personally not super pressed to get involved in anything, kind of just watching this move play out. And I'll get involved when things start to stabilize. Yeah, Jimmy, you can use the volume profile in small time frames. I personally don't as much, but yeah, I've pretty commonly seen that. What also I've seen people do is something like this type of setup. Let's see if I still have the study. Yeah. So I've also seen this type of setup. Let me fix it really quick, where they pull up the volume profile intraday. So you can kind of see how that works. So it just like shows the profile for every day. And you could kind of trade based on that, which the hourly isn't the best time to look at that. Yeah, the 30 minutes a bit cleaner. But you can kind of see how that looks. So this is also a pretty common way to use the profile. So you kind of see here, typically you can kind of trade this based on where you close relative to value or where the value for that day was. So like you can see here, we had a big amount of resistance right around this area, which ended up being the high of day today. Let's see. Here on this day, we had a big amount of support here, ended up being the low of day for the following day. Same thing here, right? We had this big amount of demand right around here, ended up bouncing the next day there. Yeah, so you can use the intraday profile as well. It's pretty cool, Jimmy. Yeah, seen a lot of people use this. I've used this. I mean, obviously, I've used this once or twice because I have it set up. Yeah, I could probably share it. Let me see. I mean, I could probably just show you the settings to it. Yeah, I'll just show you the settings. I'll post my settings for this in the Zoom chat real quick. So this is the intraday volume profile here. So that's how I set the intraday up. Obviously, the colors I'm not showing, but you can set the colors however you want. So that's the intraday. And then I also have overlaid the volume profile for the entire time frame, which shows the pink line, which is the point of control of the whole time frame, in the value area high and low of the whole time frame as well. So I'll show you how I have that set up. Yeah, I can't share the study set individually. I could make a style for it, but I don't have one now. But I feel like this is probably easier if I just send you the screenshots. Oops. Yeah, that's how I have it set up. Obviously, you can, and I'll send a screenshot of what the chart looks like as well if you like really want it to be the same. Also, I recommend saving these pictures to your camera roll too because they'll go away when we end the Zoom. So I'll end it for the next minute or two so you have the time to save everything. So yeah, there's everything. So you have a screenshot of it. And also this will be recorded too. So if you miss it all, you can check the recording. But that's how I have it all set up. And then also the last thing that I did, Jimmy, is I turned off pre-market. So I went into equities and turned off show extended hours. All right. iPhone says, can you draw a trend line, SPY low and top trend line? What price action would you be aware of if you still go short or long? So I consider it to sell. Okay, yeah. Interesting question. Me personally, I'd be much more wary of continued downside, especially when you get a move like this. This is really common kind of relief bounce price action where you get this obviously massive bounce after a huge overextended move. You take a look at the bands. This was way, way overextended. So this was kind of bound to bounce. Yeah, taking a look at the bands, we were outside of the third standard deviation, which, you got to bounce outside of that. It's just statistics at that point. But once we got that kind of short-lived bounce, obviously as of today, not looking so hot, still kind of a lot to develop overnight. Me personally, I'm not super interested in trying to predict what's going to happen from day to day. But if I had to bet on it, I would probably say we're going to retest these lows, 510 minimum. Realistically, though, I wouldn't be surprised to see a test of the 200 moving average. Yeah, that would be my best guess in terms of where this drop ends, even maybe around these swing lows. For now, until something fundamentally changed. So you don't factor pre-market data spike. That's just for that specific study that I shared, the intraday volume profile. I don't, just because it's a bit cleaner to see. And honestly, I haven't gotten too much experience with the intraday profile. I haven't really actually used it all that much. I mostly saw it online and I was like, oh, I like that setup. I kind of wanted to test it a little bit and kind of strayed away from it because, yeah, I'm not really as active of a day trader. So mostly I'm focused on swing trades. So the intraday volume profile doesn't mean much to me at this point. Cool. All right, everybody. Well, thanks again for your time. Gonna call this one here, and we'll see you all next week for the maybe last section of the series. I'm suspicious we're gonna want to do another one. So just continue talking through examples because I personally feel like it's pretty helpful. So we'll see how we're feeling after the last section and maybe go for another one. All right, everybody. Have a great night, and see you all in the next one. Thanks so much for being here. Adios.